At a moment when investors are going gaga for cyclical companies that perform a lot better when the economy accelerates, think the big smokestack industrials. What are we supposed to do with the safe, steady, recession-resistant names that do just as well in good times and bad? Take the utilities. Now, the hedge fund playbook I used to operate by says you should sell the utilities when the economy kicks into high gear because their big dividend yields become less attractive as interest rates rise. And they just can't generate the kind of earnings beats we've been seeing from the likes of Caterpillar or 3M. Yet at the moment, many utilities are within striking distance of their all-time highs. It's odd. Consider American Electric Power, AEP, which owns the largest power transmission network in the country, along with a major power generation portfolio. This company has a 3.4% yield at these levels, and given how Treasury yields have surged in the last couple of months, you would think that investors would be backing away from it, but that has not happened. In part, I think, because the Trump administration keeps rolling back Obama-era environmental rules, making it much easier to run a power company, but we got to learn more about this. Because AEP just reported a weaker than expected quarter. It was a 6-cent earnings miss off a $1.10 basis, softer than expected sales, down more than 12% year over year, but the stock actually rallied. Yeah, it's currently less than $1 off its highs. I'm wondering what's the secret of the staying power. Let's dig deeper with Nick Akins. He's the chairman and CEO of American Electric Power. Get a better sense of the quarter and how his company's doing. Mr. Akins, welcome back to Mad Money.
Great to see you again, Jim. Great to be with you.
Thank you, Nick. I have to believe, Nick, that somehow what people did was they realized, let's back out Storm. Let's figure out this company had to be the hardest hit, and how would they have done? Because the fact that your stock was up big tells me that you had a monster good quarter.
Yeah, so the quarter, even though it was relatively light, the weather during this year, this has been the mildest weather this year in 25 years. So it impacted us by 3 cents for the quarter. It impacted us for the year 16 cents per share. So when you think about that weather impact and the ability that we had to even bring it back to within 3 cents of the original guidance level, that's really a great outcome. But also it says a lot for next year. For 2018, we reaffirmed our guidance for next year within the existing original guidance range, and the growth is still there. There's no question about it.
Well, I'm so glad you mentioned the latter, the growth is still there, because I'm building a new thesis. And you and I are old enough that we shouldn't build new theses. We just stick with the old ones. But we are having a bit, look, and I've been out with you, you know, of an American industrial renaissance. Yep. And one of the ways to play it is to take a great power company that benefits from that renaissance. Do you think that's why American Electric Power stock is so high, despite the fact that interest rates are going higher?
Oh, absolutely. I think obviously we're making huge capital investments in the transmission area and the renewable energy area across the board from a distribution standpoint. And when you look at the fundamentals of the economy right now, what we're really heartened about is we're seeing advances in all sectors of the economy. So not just oil and gas, but across primary metals, even mining is coming back somewhat. So you see those kinds of advances, and it's really positive going forward.
Do you keep track of large greenfield projects and how many there are now versus all the years you've been in the business?
Oh, there's a lot of greenfield projects when it comes to renewables and other forms of energy. Not so much particularly in the nuclear or coal side of things, but when you think about the infrastructure investments like we make on the transmission system, it's a huge amount of new investment infrastructure, and the capital deployed is really working out well for our shareholders.
Well, that's why, because I want to get to Windcatcher. I mean, you at one point say, I usually don't have this in a utility conference call, but you said you should figuratively drop the microphone, but let the facts speak for themselves. $4.5 billion invested, $7.6 billion in customer savings. Is this the largest wind project or among the large wind projects in the country?
Yes, it is. It's the largest wind project, 2,000 megawatts of capacity. We also are building a generation interconnection just to get that capacity to the load centers. A huge transmission investment, a 350-mile, 765 kV generation interconnection to complete the project. So $4.5 billion invested, $7.5 billion in customer benefits. Hard to argue with that.
Amount of people you're employing to do it?
Oh, there'll be thousands employed on the construction side of things, and that's really an economic development engine for the entire area. And then the infrastructure that's put in place can be very positive for the future in terms of growth in that area.
All right, well, I'm so glad you came on because I thought this is a gigantic project. I'd love to see it. I'll take an invite. I'd love to see it be built.
Oh, it's going to get built. We already have 4 of the commissions already have set up procedural schedules to review this project. So that really is positive. And obviously, we want to make sure that the economics remain there as well, and it will. So it's really hard to argue with.
Well, it's terrific. Look, congratulations on having an unbelievable number despite the weather, because it really was terrific. That's Nick Akins. He's Chairman, President, and CEO of American Electric Power. Always good to see you, sir. Thank you.
Thank you, Jim.
Yeah. Look, you know this is my favorite. I mean, they just keep delivering and delivering and delivering. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.